Welcome to iGlobal Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me to the new week. To begin with, the Australian dollar is still attempting to sell off, surprisingly, since the bullish divergence that we had late Thursday, along with the rebound from 73.75. The market has struggled to claim the target so far as 75.65, but nevertheless, from the technical implications that you can see here from the MACD, from the histogram, and also from the other indicators, we can still get to the top side of the range, which comes in somewhere around 75.65 or to 76.15.25. Above the level of 75.65, I am a seller, and I do expect to see the market eventually turn away from this region once this short-term up trek has been completed, and then look back towards the region of 73 cents. It is surprising that the market is still relatively bearish, considering that we are extremely low and some divergence here. But nevertheless, the resistance is holding around 120.40 for the euro, with minor resistance intraday at 119.85. Since the break of the double top reversal, the market has looked towards that 118 level. Now the break of the 121.80, you can see here, does give this measured move from the top of the neck, head to the neck, and then from the neckline down to this region of 118. For this week, though, I do expect to see further weakness, eventually turning back to the downside. On Friday, the anticipated US data release from the non-farm payroll was at its lowest level since the year 2000. The non-farm payrolls increased by 164,000 in April versus 192 jobs forecast, with the employment rate dropping to an 18-year low of 3.9%. The numbers released on Friday still point to a continuing strong labour growth. This in turn should still see the Federal Reserve continue to gradually hike rates for this year, with June currently set for the next rise. So looking at the technical view, I am looking for a down test, but we should still watch out for any rallies towards 120.40 as a sell opportunity. Well, the odds, obviously you can see that the market has retreated from the 109 level and looking down towards the buy zone, I'm calling around the mid 108. It is viewed that this is just a pause in the uptrend, and there's a weakness that slowly eases the technicals out of an overall condition, should give us opportunity to buy in front of the 108 and see a recovery up towards 109 to 111 as a broader picture. At the present, I still don't have a view on the pound because it's oversold, and for the fact is that the market is still holding some risk for a turnaround. Although I don't have the confirmation from the technicals, I'm still expecting to see some kind of retracement very soon. This week we do have the Bank of England rate decision, but Mark Carney has dampened the expectations of a hike this month. It was looking around 85 in April, but now it's down to about 20 as for the view that they will raise rates. If unexpectedly they do raise interest rates, then I do expect to see a dovish or at least some kind of retreat from the hike in the statement. But nevertheless, Mark Carney is still trying to delay any further rate rise in the short term. The gold outlook is still coming back quite positive, as you can see here, after the divergence and also the rebound from 1,300 now sets the target up towards a region of somewhere around 18 to 26. If you're long, I would bail out of those positions because we could still see another test down if the US snaps back to a more positive stance. But nevertheless, this roller coaster ride from 1,300 to 1,365 is still being played. The silver outlook since the rebound from $16.15 is still looking to its target at $16.55 that can progress back to the highs seen around 85. I'm not bearish for silver, and I still feel that any dips is an opportunity to buy as I overall look for the topside challenge. And to round up with oil, well, we're just back to the top side of the range after 3 attempts did fail. Is this the fourth one that's going to fail as well? I believe so. If that's the case, then this level of 70.72 still caps the market, and I'm looking for a potential pullback to $66 a barrel. The market's still a little bit on its toes with the tension between President Trump and Iran. As the focal point for this week, the market will be looking to see what Trump has to say on the 12th of May. He has to decide whether to pull the United States out of the 215 international accord to curb Iran's nuclear program and restore sanctions on one of the biggest oil producers. President Trump has repeatedly threatened to abandon the deal, reiterating last week that unless European allies rectify the terrible flaws in the agreement, he will refuse to extend US sanctions relief for the oil-producing country. So all eyes on the 12th of May, and see what the verdict is from Trump and the sanctions. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report. And I hope you enjoy the great start to the new week.